Bristol-Myers is buying Celgene. It's a huge deal. $74 billion. Bristol in cash and stock. Bristol-Myers is offering $50 plus one share of Bristol-Myers for every share of Celgene. A lot of thoughts about what's happening with this, but the company is also taking this time to talk about its guidance for fiscal year 2019. It's looking at adjusted earnings per share of $4.10 to $4.20 before you consider any of the impact from this acquisition. That is above what the street had been anticipating, $4.07. So if you're wondering about any guidance, especially after what we heard from Apple, all these worries about earnings season, what that's going to mean for everybody else, they are taking the time to say that what they are seeing for fiscal year 2019 is above what the street had been anticipating before you consider some of these costs for the acquisition.
So 52 is where Bristol-Myers closed, so they're adding 52. They're saying it's worth 102, but Bristol-Myers has indicated 46.59 to 47.80. So it's indicated around 47 a day, so that would put it at $97. There's 6 new drugs apparently in stage 1 and stage 2 development. It's early and late stage pipeline that includes 6 expected near-term product launches. I mean, Celgene was put on the map with that weird, the way they used thalidomide to address certain types of cancers, and it turned into, I think, Revlimid is what it is. And Bob Hugan, for a long time, ran that company, finally ran for Senate, and good old Bob, Senator Bob Menendez, used to, on all his ads, hammering Hugan for making too much money and charging too much for cancer medication, et cetera, and it worked because Menendez is back in spite of his, in spite of his checkered path.
Also a very opportunistic deal on Bristol-Myers' part in the sense that Celgene traded as high as 145 back in September. So the stock has actually been in this rough patch for a while. So getting it less than it traded several months ago, obviously, biotech's been kind of weak as the market has come off and risk appetite's down. And there's also Celgene, one of the more, those more mature biotechs, like, that'll trade at a little more of a low multiple. It's not like the high-flying young biotechs because they do have some.
But it had, it's worth $74 billion is a huge number for a biotech company. And I watched Celgene, and I couldn't, over 10, 15 years or 20 years of watching it, because it's based out in Summit. It's based like a couple of miles from my house, and I knew Hugan and everything else. And just watching, they for a while, they had the sexy stem cell contribution that was going to, explain the story for Celgene, but really they've done it all based on Revlimid and Revlimid, other molecules similar to it.
Although they are talking about, Bristol-Myers says the combined company will have 9 products with more than $1 billion in annual sales, just trying to show of the depth that they have.
Because they say that those 6 expected near-term products represents $15 billion in revenue potential. Who knows?
More than $1 billion in annual sales each. They also, we should point out, Celgene will be holding 31% of the new combined company. Bristol-Myers shareholders will own about 69% of the new company. A lot of things that they're coming out talking about, too. They say they see about $2.5 billion in run rate cost synergies by the year 2022.